Hi, this is Chris Smith from theoptionclub.com. You are looking at a chart of the XLF. This is an exchange traded fund that is a basket of stocks that are in the financial sector. And it doesn't take long to look at this chart and realize that the financial sector has been getting hit hard by the market. In fact, it's been getting hit hard by the market since last year. But look at this. Here we have a bottom. Here we have support at $20 per share. And it looks to me like the XLF is finding and now forming a base. I could be completely wrong about this, but that's what I'm seeing on this chart. So I started looking at ways to play this. The XLF is a basket of stocks, which means that you don't have the same risks you have with an individual company. An IndyMac can go bankrupt. A countrywide can go bankrupt. But can the entire financial sector go bankrupt? Probably not. So, at some point we're going to find a floor here. This thing is not going to go to zero. And what I would be looking at doing normally would probably be selling puts at $20 per share or somewhere lower. And my game plan would be to take assignment of the stock, if that's what occurred, and then sell calls against it in a long-term rolling covered call campaign. Or I might take a look at selling put verticals. But because we're using OptionVue, and because OptionVue has the TradeFinder, OptionVue will tell us what it thinks is the best trade given our set of parameters. So that's what I did. Is I hit the TradeFinder button, I gave it my parameters, and I asked the software to recommend the best trades based upon my criteria. So here's the where we start with TradeFinder, and the first thing you're going to see here is that we're going to select which assets we're asking TradeFinder to analyze. Now we could select all of our asset files, we could just have a list of assets, or we can select specific assets, and in this case we're just going to look for trades using XLF. We then go to the next tab, which is targets. You'll notice that your symbol here, XLF, is present. Do we anticipate any change in volatility? I'm just going to leave it at 0%. And then what kind of target do we want? Are we predicting a price? Are we predicting a price range? Or are we somewhat agnostic about price, and we're just going to shrug our shoulders and say, well, gee, I don't know. Let's just take a log normal distribution and plan accordingly. In other words, let's have a directionless trade. So that's what we're going to do. And we have a mildly bullish outlook for this stock, but again, we could still see further downside. I don't really know that we've found a bottom, so I'm just going to go with a bell curve. I'm going to click on this button here, which will bring in the center price, or the current price of XLF, and then we're going to use a volatility figure to project what a standard deviation is going to look like. And I'm just going to push the button here, and what that does is it brings in the current implied volatility for XLF. And then we're going to select a date, and I've got the September expiration date in there. One way to do that is you just type in X2, which is the second expiration date. We're in early August right now, so August would be the first, but there's really not enough time, and so I'm looking for a September trade. And so then we just hit the tab button, and the date comes in. What strategies are we going to look at? Well, we're going to look at vertical credit spreads. We're going to look at horizontal credit spreads, diagonal credit spreads, and we'll even look at iron condors. That's what we're interested in. I'm going to say both for calls and puts. I don't care whether I'm selling calls or puts. And we're just going to explore the main strategies And then we just, we hit goals, which tells us, how much money we're going to put into this. I'm going to put $1,000 down, and then I have some simple filters, nothing sophisticated, and we're just going to hit go. And then what you're going to see is OptionVue is now working through all of the various trade possibilities, and it's coming up with trades based on the criteria I just supplied. And you're seeing those trades now show up down here. We have a diagonal credit spread. In fact, diagonal credit spreads populate the top 4 position, and these are being ranked. There's ranking basis here, and they're being ranked on probability of profit. You can't see that right now because it's off to the right hand side of the screen, but I'm ranking them based on probability of profit. And what we have right here is we're going long the March $12 puts, selling the $18 puts in September, and that would be for a 10-cent credit. We've got worst case returns, we have expected returns, we have the best case returns, and probability of profit. You can't see all that data because it won't fit on the screen here while I'm recording. But when I looked at this, based on probability of profit, the number one trade was here using the March $12 put and the September $18 put. I ended up choosing the second one, and the only reason I did is because the worst case returns on the first was a 31% loss with an expected return of 6%, and I was able to cut that in more than half by going with the second choice. And so then all we do is hit analyze, and we've got our chart up on here, and let me readjust the screen. Okay, so here's the chart, and what I'm looking at here, and the reason I selected this trade is it's got a little bit more forgiveness if things don't work out. But again, we're expecting that XLF is going to stay at $20 or above. In which case, if we sell off and we come back, if it falls back in price, we've got this nice big area here that's going to give us a good profit. And we don't start losing money until back here at that's about what, $16.60. So we've got a fair amount of downside that's allowable and still give us a nice profit. To the upside, we basically have an unlimited upside, and the only real drawback here is that the upside profit is very limited, and that's because we were only bringing in about a 10-cent credit. But what is attractive to me about this trade is it lets me take a position on the XLF. It gives me a lot of flexibility to the downside because I think it is going to be volatile, and I can start rolling that short option so that when September expiration comes up, I'll probably be buying back that September option, selling the October option, and I can do that out into January. So even though I'm only making a 10-cent credit today, I'm looking more in October, November, and December to sell premium in those months. And remember, since I'm selling this for a credit, I don't have a debit that I have to pay off. But what I've done by buying the January puts is I've put a floor in this thing at $15 per share. So if XLF really tanks, my butt is covered. So I don't, I've limited my downside. I've set myself up to sell puts against this thing. The game plan will be to continue selling puts out into January. If at some point I'm assigned on a put, I have the ability to sell calls against it. If I find myself in the money at some point prior to expiration, my choices at that point is to just hold the position and let assignment take place, or I can roll the position, or I can just shut the trade down for whatever profit or loss I happen to be at. So there's TradeFinder. Here's a different way to play the XLF. I hope you guys find some benefit in this. Feel free to comment either on the discussion board on the blog or send me an email. Take care. Bye.